Hello, ladies and gentlemen. Okay.
SMART24, driving business.
Did you know intellectual property refers to creations of the mind of human intellect, such as inventions like designs, symbols, writing, music, designs, names, and images used in commerce? Intellectual property law grants the owner of such work or invention exclusive rights to exploit and economically benefit from such creation. In Uganda, to enjoy protection and exclusive rights, one has to first register such invention with Uganda Registration Service Bureau on domestic level.
SMART24, driving business.
Hello, ladies and gentlemen, and a very warm welcome to the show. And of course, it is the Wednesday and the 9th of November. You're watching SMART24 TV, where we drive your business. This is Financial Markets, your number one program to bring you the latest analysis on the financial markets globally, here in Uganda and in the region in East Africa, as of course they do unfold. The show is proudly brought to you by Altex East Africa. Remember, Altex is your number one private stock exchange, bringing you now particularly treasury bonds across East Africa with simply a dial of *292# using MTN. You can now be able to pay or be able to buy and even sell treasury bonds across East Africa, in Uganda, Kenya, and Tanzania by simply the use of your mobile phone. And this has been done in partnership with MTN Momo, where now you can transfer funds directly from your mobile money wallet that is of MTN onto Altex and be able to buy yourself some bonds. And those of you who are actually selling, you can also be able to earn that money on your mobile money wallet. That is if you're an MTN subscriber. And the markets at Altex open at 15 minutes past 8 a.m. and close at 15 past the hour of 3 p.m. Altex East Africa doing something new. Now, ladies and gentlemen, getting into the third day of the week, and the markets, of course, are rolling. The midterm elections started kicked off yesterday in the United States, and of course, that was a big deal for the stocks in the United States. Now, the stocks edged higher on Tuesday morning as investors awaited the outcome of the midterm elections in the US. The S&P 500 inched a bit higher by about 0.1%, and the Dow Jones Industrial Average ticked up by about 0.3%. The tech-heavy Nasdaq Composite for the technology companies rose by 0.2% early Tuesday morning. Remember, the Nasdaq really faced a rough day on Monday, as most of the tech companies last week registered losses in their third quarter earnings there. The reports came in and, of course, really affected how the stock markets played out for Monday. However, on Monday, also, the U.S. stocks rose ahead of a week of potential market-moving events. That is, for example, corporate earnings, midterm elections, and inflation data release. Investors now are focused on were focused, of course, on Tuesday's midterm elections that determine, of course, the control of the House and Senate of the remainder of President Joe Biden's first term. Historically, Wall Street has preferred a split Congress or White House with political gridlock that could impede, of course, major policy changes, an outcome that investors see as favorable for the equities. According to JP Morgan's latest client survey, about 39% of respondents were split on whether the U.S. midterm elections will be a positive catalyst for risk markets or non-event, while 21% expected negative implications on the market. Regardless of the winner, of course, some strategists argue that the midterm election outcomes have a modest influence on the financial markets. The overall near-term implications of the 2022 U.S. midterm elections are quite modest for FX markets, according to Meera Chandin, the strategist at JP Morgan. They're writing on a note to clients. And also the markets should thus continue, he continues saying, taking guidance from the Federal Reserve's monetary policy decisions than from any new large fiscal packages. One wildcard word flagging is the risk of renewed uncertainty around the debt ceiling as well. Another closely watched item this week will be the Thursday release of October data, inflation data there. So on Thursday, there will be, that is tomorrow, the data for inflation will be released. Of course, this still has a lot of influence on the financial markets as, of course, the economy continues to grapple with inflation. And according to economists surveyed by Bloomberg, they expect the headline consumer price index at an annual rate of 7.9%. And this is down from 8.2% in the month of August. That was the month before, rather September before October. Even if the report shows prices starting to moderate, the core consumer price index is far above the Federal Reserve's comfort zone. The problem is, of course, going to be in the month-over-month terms, and of course, we still think there's going to be a fairly very strong core consumer price index. That's according to Franklin Templeton, the fixed income CIO of Sonal Desai, talking to Bloomberg there. And of course, more people have come up, of course, to give their predictions. But the data will be released tomorrow, and yesterday, of course, were the elections. And you can check out some of the results of the midterm elections that are already out, and several Americans are excited. Others are still having mixed reactions. But more, of course, on the show, we're concerned about the effect of these midterm elections on what we have as our financial markets, the biggest financial markets in the world for the United States economy. Now, the problem here basically comes in especially now at the inflation data that is going to be released on Thursday. Remember, the Federal Reserve has a target of about keeping the inflation up below 2%, and currently it's way beyond that. And of course, due to this, the Federal Reserve Bank of the United States has hiked the central bank rate for the fourth time in a row by about 75 basis points. Now, this is one of the biggest escalations in or hikes in the central bank rate in history. And of course, it comes at an unprecedented time of inflation as well. Since 2008, considering the data we have right now from the consumer price indexes of the United States. But of course, as many speculators are saying that the Federal Reserve has been really quick in terms of raising the rate, but the Federal Reserve says its hands are tied as well, with the CEO, Mr. Powell, Jay Powell there, coming in to say that there should be maturity in the market, and of course the data really had to push them to put the interest rate up there. And at the moment we are having the rate between 3.75% and 4.0%. That is the central bank rate of the Federal Reserve Bank, which is the central bank of the biggest economy in the world, that is the US economy. Now, looking at the data here from the closure of the markets yesterday at the US stock exchanges, we're seeing that the S&P 500 closed the day with 3,850.19 points, and this was a 47.39 points appreciation and a 1.24% that was witnessed there. That was the increase that was witnessed on the S&P 500. The Dow, that is the Dow Jones Industrial Average, which tracks the top 30 American companies or industries in the United States, went up as well by 1.42% on average for the day, ending with 33,292.05 US dollars. We also had an increase of about 465.05 US dollars on the Dow Jones Industrial Average. The Nasdaq, which tracks the aggregate performance for the listed tech companies like Facebook, Google, Amazon, and the like, went up by 164.53 points and closed at 10,730.09 points. Remember, NASDAQ has over 3,000 companies on the index and tracks the aggregate performance of these companies on the US stock market, and it appreciated by 1.58%. Looking at the Russell 2000, which tracks the aggregate performance of the smaller caps or smaller market capitalization companies on the US, we're seeing that it went up by 0.91%, and this was a 16.4 points increase there in the Russell 2000, closing at 1,826.15 points. Crude oil declined by 0.51, and that was to 91.28 US dollars, and gold went up by 35.20 points and went to 1,715.7 points. The 10-year bond yield declined by 0.036%, and rather 1.4%, and 0.063 points, down to 4.1510% at the moment. The Bitcoin went down as well by 1,284 US dollars, and this was a 6.18% decline to close to 19,505.37 US dollars. Of course, Bitcoin is still struggling as well to come up above the 20,000 mark. We're seeing that since this coin declined in value around the month of June, we have not seen it resurrect once again. However, just a few moments ago, we're seeing that actually it crossed to 20,000, but still on a decline of about 1.5% in the last 24 hours as well. That's it from the Bitcoin. We are seeing also CMC crypto down to about 459.65 US dollars, and that's a 0.49% decline as well. The Nikkei index for the Tokyo or Japan companies, there are 225 of them, has also appreciated about 1.25%, and the FTSE Financial Times stock market exchange there is at about 5.38 points increase to 7,305. And this is a 0.07% appreciation. Now, ladies and gentlemen, this is data coming in, of course, from the US stock markets and the global markets around the world. You can keep yourself updated on what's happening and what's latest on these markets, and by visiting www.smart24tv.com for more information. Away from the US markets, the Bank of Uganda here, the yield on some of our instruments here has also been fluctuating for quite some days. Currently, seeing also the treasury bonds also appreciate in value here on the Uganda market. The secondary market activity here, we're seeing the yield at above 15%, to be particular, around 16 to 17% on average at the moment for the longer term instruments, especially 2030, 2040 bills. Those bills that are maturing in 2030 and 2040 are really still coming in at a very good interest rate here on the Bank of Uganda website. You can also check out some of the latest information regarding the auctioning. Remember, auctioning happens every 2 weeks, and of course, different primary dealers participate in this auctioning. You can also be part of that by simply getting through your primary dealer. Who are primary dealers? Of course, these are people that help you access the bond market, and these include commercial banks and some fund managers as well. The primary dealers in this case, in the commercial banks, we have about 8 of the banks now that can help you be able to directly access the treasury bond market, including Housing Finance Bank, United Bank of Africa, Centenary Bank, Standard Chartered, you have Bank of Baroda, and you also have Equity Bank and the like. These banks will help you get into the bond market. At the moment, of course, most investors are more leaning towards the bond market because of exactly what's happening in the economy, and it's being manifested in other financial markets, like, for example, the stocks. The stocks currently are facing it rough on in terms of inflation, and of course, most stock prices are going down. Several companies are still having issues to stay afloat, to pay their employees, and so this is manifesting in the stock markets, and people are running more towards the bond markets at the moment because of the volatility and lack of liquidity that's currently being manifested in the bond, in rather the stock markets. And this is manifested across Africa. As we're going to just look at yesterday's, for example, trades, most of the big exchanges around Africa lost on their all-share indices, or those indexes that track the aggregate performance of all the listed companies. And we're talking about Johannesburg, you're talking about Nairobi, you're talking about Uganda Stock Exchange, Ghana, and so many others. And so it's not a good time for the stocks at the moment, and people are finding it more preferable to get onto the bond market. And of course, I promised that we shall be also looking at the quarterly bulletin for the Capital Markets Authority and see some of the data they tried to collect for the last quarter, that is the third quarter of the year 2022. And we try to break down at least every single day a little bit of that report, getting to understand matters concerning the third quarter, but also getting to make projections for the fourth quarter, getting ahead. But still talking about the bond market in Uganda, it is one of those things you can take advantage of actually at the moment in the financial markets, because we understand government is not a defaulter. We also understand that the treasury bonds give you that leverage of getting to enjoy a risk-free environment, almost 100% risk-free environment, because you are going to get back your money. It's not like in the stocks where you are not sure what will happen tomorrow or what will happen the other day and what will happen to your money. In the bond market, you are almost 100% assured that your money will return to you. Now, my friend, how do you get into these markets? Well, very simply, you have to open a central Securities Depository Account, or CSD account. And how you can do this is through your primary dealer, or you can also visit Uganda Stock Exchange. But from your primary dealer, like I mentioned, there are banks that have been given that mandate to be able to help clients across their customer base to be able to access these markets and use money on their bank accounts to be able to buy some of these financial instruments. And how you can do that as well is through the stock exchange, which also is a secondary market participant as well. So those are some of the channels you can use. And when you open this CSD account, it will help you store your instruments. For example, you're buying 10-year bonds or 20-year bonds. They will be stored on this account for as long as you want them to be. And for you to become a bidder or to participate in the auction, you must have the required amount of money. Of course, this money is limited to 100,000 for non-competitors minimum, and 100,100,000 for the competitive bidders minimum. So if you want to be a competitive bidder, and by competitive bidder, we're meaning those people who can actually dictate the interest rate, because as you're applying for this instrument, you put in the amount of money, the account number, the primary dealer that you're taking through, that is taking actually you through this process, and you get into put that money on the account, making sure that that money is strictly on that particular account, and various other steps that verifying what is actually happening. Now, when you get to the Bank of Uganda, they will, of course, assess the different bidders and be able to pick the best interest. They will drop the rest, and the rejected interests and the rejected bidders will be notified. And those that will have been accepted will have the money transferred to Bank of Uganda. Now, when these interests are set and everything is good, the non-competitive bidders can also come in at this point and take up the interest rates that have been selected by the Bank of Uganda. When you get this, of course, started, you will have to start calculating your period. If you've bought maybe an instrument worth 10 years, you start counting there and then on that particular date. And for every 6 months, you will be getting a return on your investment, and that will be half of the annual return, which is called the coupon rate, or the coupon itself. So you'll be getting half at least every 6 months. And at the end of the year, you get the full coupon until the period of maturity. Or you can now move to the secondary market, where we have secondary market activity, where people who actually bought on the primary market from Bank of Uganda can now sell these instruments back to the public for further trading. And this is the way really how the bond market works. And people now are moving and realizing how important it is to be a participant in some of these markets because of the security they provide for your money, but also because of the value addition they get to the money, because you're having an interest coming in and you're having also your initial deposit secured in the Central Securities Depository there. That's, of course, some of the pertinent information that we always want to share with you here on the show, so you can keep in the know on what's happening in the markets and how you can use these markets to your own advantage. Now, however, we had on the stock markets performance, as I mentioned as I began the show, the markets didn't appear very well, as they have not appeared very well in the last few days and the past couple of weeks, with most stock exchanges in Africa losing on their all-share indexes. You're looking at Nigeria being one of them, Zimbabwe this time around as well. You're also looking at Uganda being inclusive, as well as Nairobi, and several stock exchanges here as per the data for the last day of trading. We are going to take a quick breather, and when we return, we get to break down some of the stock performances here in Africa, starting with Nigeria, going to East Africa as well. And we will give you some of the insights into what we could expect and some of the companies that are still doing good despite the tough economy and a tough market right now. Stay with us. After the quick breather, we return shortly.